Hey guys, welcome back to episode 6 of Back to Basics. Again, where we're taking Jessica and we're just teaching her the ropes of trading while we're both self-isolating for flattening the curve and all of that good stuff. So we went through the first beginning section and then we went through a test. And that's going to kind of be the format going forward, where it will be probably 3 or 4 lessons, and then a test, and then 3 or 4 lessons, and then a test, just to make sure that you're actively using that knowledge. And then eventually...
You were going to say listening.
Well, that too. And then we're going to get you onto the sim quickly. So again, if you're interested, Trade Ideas now has a simulated trader. So they give you 100 grand of fake money along with real live market data. You get to play with it and learn a skill, grow something, whether or not it's a swing trading or day trading or auto trading. They do all of that there. So again, here are our socials. Please help us get Jess to 100 subscribers so that she can grab that YouTube title. If you're seeing it on my channel, links for everything, our Twitters, our YouTubes, an email. I do mentor traders as well. Email me if you're interested. I'll send you some details. I like this kind of stuff. I like this teaching stuff. So hit me up. That will be down there as well, as long as a link with Trade Ideas. Whatever. I'll put a picture of a cat down there too, just to make it worth your while. Okay. So support and resistance. And this is a big one because this is the basics of all trading. All trading has something to do with support and resistance level. We'll go over it. But essentially, these are points at which price respects. So if a price is moving down to this point, it bounces off it. If it moves up to this point, we'll talk about why in a bit.
Okay.
But it's all based on crowd psychology. And again, this constant theme of a battle between two sides. Every time there's a trade, right, there's a buyer and a seller. It's who's more aggressive and who has more money and who is right.
The trauma.
That's every day as a trader. You're trying to say, I'm going to go in today and either the bulls are win or the bears are going to win. And I need to try to figure out which one is stronger and stay on their side. And then when the tide turns, I need to switch teams and get on their side. So this is a huge way, a huge reason for this. And this is where we take action. This is the candlesticks that I showed you were A, just to read a chart, but B, there's something that you're going to combine with support and resistance so that you get you're using the candlestick patterns and the psychology that we talked about there, along with the psychology of this type of trading, and you're going to merge them together and they're going to be way more powerful. Okay? Support and resistance. It's where the market changes. Right? It's where a market is like a homing missile, essentially, where it doesn't, you don't point it at a target and it just knows to go there, right? What it does, every time it kind of veers off course a bit, it corrects back. And if it corrects back too far, it corrects back again. Or a boat, you could think of it. If you're trying to go there on the shore, you're going to aim this way a bit, and then the current's going to take you this way a bit. And it's going to, so every price, even though, for example, on the chart here, from the first arrow to the second arrow, you can say it went up, but it didn't go straight up.
Okay.
You can see by the candles, right? It went up, and then there was an inside day. It didn't really happen. There's a bunch of wicks up and down, so it meandered its way up there.
Right.
So what we see in nature a lot, nature being the markets, is that price has a memory. It has a history. Say, for example, the top of the big black line on the top is $20. The bottom one's 10.
Okay.
So the stock, whatever happened before the chart, we don't know, but it came down to $10. Somebody bought a bunch of it there to cause it to reverse. They bought enough, and they were aggressive enough as it moved away from $10. They were okay buying more and more and more and more until it got up to $20. And then they said, okay, either I have my profit, I've doubled my money, that's great, or I think that price is too high for the stock, whatever it is, and they sold it aggressively all the way back down. Now, when it got to 10 again, there's a whole bunch of things that go on. A, the guy who made money buying it at 10 before remembers that. He's like, oh, last time I bought the stock at 10, it went up.
Okay.
Right? So he's more likely to buy. So we call that a self-fulfilling prophecy. He thinks it's going to go up at 10, so he buys it at 10, so it goes up at 10. That's a self-fulfilling prophecy, right? And then at the same time, anybody who didn't make money the first time it bought looks at it and say, well, last time, the stock's coming down, and maybe they say, I like this company. It makes things that I use. It's a good company. And they bring up the chart and they say, well, last time it was at 10, it bounced. And look, it sold all the way down. It was 20 a little bit ago, and now it's 10. So I'm going to buy it at 10.
Okay.
So now you got two people. So, this kind of crowd psychology of piling on to what they saw someone else do in the past is a very human monkey brain type thing. So, again, a self-fulfilling prophecy. If everyone thinks it's going to bounce at 10, it's going to bounce at 10.
Okay.
And then when it gets to 20, if everybody thinks the guys who are long at 10 are like, great, I'm up a bunch of money. Last time it hit this price, it reversed. I don't want to let my money go away. So I'm going to sell, take my profit, and look for the next trade. And at the same time, there's a bunch of sellers who maybe didn't participate in the run and think the company's crap for whatever reason, right? Say it's IBM. Someone bought a computer and they loved it. So they said, next time the stock hits 10, I'm buying this. It's a great company. Other guy bought a computer, thought it was crap. He said, look, last time it was at 20, it sold off. I'm going to sell it there. So again, it's this. One guy's got an idea, and then everyone else piles into that idea. And then enough people pile in, then it works.
Okay.
Make sense?
I think so, yeah.
And that's, like, we're going to go into...
It's just based off people's feelings?
That's all the market is. That's all the market is, right? I do stuff with Bitcoin. Bitcoin is worth $5,000 because people think it's worth $5,000. That's... The Canadian dollar is worth what it is because people think it's what it's worth. Like, you don't... If you take a $20 bill into a bank and you say, give me a piece of gold or something for this, they don't. It's not based off anything except what humans think it's worth. So if it's too cheap, they'll buy it because they think it will go up. And if it's too expensive, they'll sell it because they think it's going to go down.
All right. I'm picking up what you're putting down.
Okay. Another phenomenon we see a lot of, and again, I like to explain the psychology because this is, as you just hit on, it's all the market is. It's all just crowd psychology, right? If anyone came to me and said I wanted to be a great...
Wait a sec. Okay, just hold on 1 second.
Okay.
All it is crowd psychology.
Right.
Now, this is has nothing really to do with this.
Are you going to get meta on me?
I don't know. But you talk about technical analysis all the time, all that other nonsense.
Mm-hmm.
But so it's not all crowd psychology, or is that...
Technical analysis is the study of crowd psychology. It's the visualization of data to paint a picture of what the crowd is doing. That's it. So the reason I showed you that candlestick, remember I didn't just show you a candlestick and say, here's a doji, that means this. Because I don't want to teach you like that, because what you may see is different from what I may see. And again, if you become the best trader in the world, you're going to be right 55 to 60% of the time. Right? But you can become amazingly wealthy being right 55 to 60% of the time. So, but all of these, that with the candlesticks, it was, what did it mean? And I always preference that as a battle between buyers and sellers, because that's all the market is. If you break the whole market down, it's one guy thinks the company is going to go up and the other guy thinks it's going to go down, and how aggressive are those two groups of people? Yeah, so it's this battle between these two people. It's all 100% psychology. People only think markets are going to go up if they think they're going to go up, and then they'll buy it, and then again, if enough people agree, then it'll go up. So when I say technical analysis, it's just looking at charts to try to figure out what the crowd is doing. And when I say, I'm big into statistics and back testing and all of this, all I'm doing is saying, in the past, what have people done?
Right.
Right? And if in the past, 60% of the time people do this, and 40% of the time people do this, and I know that I can make a bunch of money when people do something 60% of the time, that's it. But all of my statistical analysis starts with technical analysis. Like I will say, for example, we learned the hammer candle, right? I will say, for example, what happens if the stock was down 10 days in a row and then made a hammer candle? And Trade Ideas can answer this question. It can say, well, 60% of the time it closed higher the next day, or 20% of the time it closed higher the next day. And by doing this is where I start to make my algorithms.
Okay.
But again, all starts with crowd psychology.
Okay.
Which is, again, why I think that I think this is common with a lot of people, they think trading is all math.
Yeah.
And it's not.
Turns out you just need to be psychic.
That's it. Or just talk to enough people. So here is support and resistance again, but it's another phenomenon that we notice. And that is when a resistance level is broken, quite often that is now support.
Okay.
Right? So generally what happens with this is, say you were someone who was betting against this stock on the third red arrow.
Okay.
Right? So you had bought it, and then you had sold it because, hey, I bought it there 3 times or twice before and it worked, and I sold it there twice before and it worked.
Right.
So your psychology was just that. Or, again, I always want to look at both sides. The seller who said, listen, it's hit that price 3 times, and every time it's reversed.
Right.
So it's getting back there. I'm going to bet against the stock.
Okay.
Right? So you've got 2 people who, and that's what we talked about in the last slide of how support and resistance is formed. Just crowd psychology of, I think it's going to bounce here.
Okay.
That's it. So what happens if it doesn't? Right? It pushes through. Now, the guy who sold, and again, we're still going to use $10 as the bottom of that first line, $20 is the top, just to make it easy.
Mm-hmm.
I bought it at $10, I sold it at $20, worked great. Came all the way back to 10, I bought it again, I sold it at 20, oh shit, it went to 30. Now, in your head, you might be saying, okay, if it gets back to 20, then I'm going to get back in because I missed the move from 20 to 30, so I want to get back in. And then again, think of the other side guy who he sold it at 20 and the thing spiked up to 30 against him. He's probably in his head, and you will experience this at some point, we all have, where you go, if it ever gets back to even, I'm out. I don't know how many times, if you've ever said that for you guys, if you're saying that on a stock right now, you should probably get out. It's probably not a good trade. You probably didn't have the rules wrapped around to know when you were going to get out ahead of time. Again, I have spent many sleepless nights before I really got control of the whole risk management thing, saying if it gets to even, I'm out. So basically, again, think about it from that seller's point of view. So how does the guy who bet against the stock at that third red arrow, how does he get out of his position? He's short. He bet it was going to go down. So right. To get out of his position, he has to
buy more.
Right. So now you have a guy who was betting against the stock. And he has to buy.
Right.
And then you get the guy who actually likes the stock, seeing that it pulled back to the level that he missed out on all his profits before, and he buys.
Okay.
And that's what the phenomena, the crowd psychology that we think of that makes this prior resistance area now act as support. Support or prior resistance becoming support. Does that make sense?
I think so.
Right? Because we're looking for lack of a better term, pain points. Right? Where do people suffer pain? And then...
But the support's not suffering pain.
Well, if you flipped it, they were. Right? Everything you're seeing in one direction, you could take this whole chart and you could flip it around.
I suppose, okay.
Right? And then it's the same...
Okay, yeah.
It's always the same up and down. So this, we're going to do like 4 or 5 lessons on trends.
All right.
Trends are a lot. But, because the trend is the friend until the bend in the end.
Well, hey.
Ralph Alcampora, I think, was the one that told me that. So this is kind of showing what happens if support and resistance gets misaligned. And what this shows is aggressiveness, right? So you think of the chart before, it was, I'm going to wait for 10. I bought the stock at 10. It went up, and then it came back down. I'm going to wait till 10. But what if they, and I say they, and the bulls, for example, that crowd, is basically saying, I want this stock really bad. So say it pulls back to, instead of 10, it pulls back to 15.
Okay.
And they're too anxious. They're like, what if I miss it? I really like the stock. I want to get in quicker.
Okay.
Then new support's created, right?
Okay.
And then the prior resistance is created. Now, I can't do it to the guys on the screen, but if you draw a line like this,
Yes.
I'm drawing a diagonal line across the support and a diagonal line across the resistance. You see how those are parallel lines? The same way, if you could take those two lines and you just shifted them a bit,
Yes.
they would be the same as they were before.
Okay.
So it's just showing that people are doing the same thing, where if you connect those first two lines, right, a line is created by 2 points, and then they come down, they say, okay, well, last time it bounced off that line, we got this nice run up. So I'm going to buy it on that line. I'm not going to wait for it to come all the way back here.
Okay. Yeah.
Because I'm worried that it's not going to.
I see.
Right?
Yeah.
If I say I want to buy it here, but I really want the stock,
Okay.
I'm going to buy it a bit early. Right? And now here is the real world. This is old now. I don't think SeaWorld's doing that good, but where's the support?
Where is the support? The support's at that red line you got drawn there, isn't it?
Yes.
Yeah.
That's why I drew that red line there.
Oh, okay.
But you can see, right? What happened is we got what kind of candle, and
Hammer.
I need to figure a way to point. But yeah, at the first area that it touched the first support pop, you see there's two. They look a little different. Again, everything I show you isn't going to be as clean in real life, right? So you see how both those are essentially hammers.
The green and the red
The little
one?
green and the red one.
Okay.
They mean the same thing.
This is just right above 10, like the 10th of January. Is that what that is?
Yes.
Okay.
Yeah.
Just for anybody looking at it.
No, sorry, the 1st of
October. Okay.
That's how long we've been waiting to do this second clump of videos. Not then, but over here. So that's what, mid-February.
Yeah.
And then you can see, so everyone said, okay, it bounced off that area. Let's call it $25.
Okay.
Then it bounced up a bit and it came back down, and you can see that people said, okay, it's right where it was before, $25. Look, it bounced. So you can almost see that a good move would be when this hammer candle formed at that support area, you could have been a good buy.
Yeah.
Right? So you see how now we're combining the first thing with the second thing. And now just
That would have been a really good buy.
well, and just think about this in your mind. We're not going to go into this yet, but remember how I keep saying if you're right 55 to 60% of the time, you're golden.
Okay.
That's because we're going to set it up that always when you're wrong, you're going to lose a little bit, and when you're right, you're going to win a lot.
Okay.
Right? So think about if you said, I'm going to buy it on the close of that hammer candle.
Okay.
And I'm going to say I'm wrong and the trade's wrong. And I know I'm going to be wrong 4 or 5 out of every 10 trades. So I'm going to say if it gets below where those little 2 hammer candles were the other day
Yes.
and closes down there,
I'm out.
I'm out.
Okay. Yeah, I
Right?
getcha.
How little tiny that risk is versus how much you could have potentially made.
Right.
So you're risking $2 to make like $15. Right?
Okay.
So if you do the math behind that, if you are right 10% of the time, you're going to make money.
Okay.
Right? And that's the premise. Now, the premise here is the $25 is support. You could, in theory, take a good high risk reward trade in that area, again, if you believed it was going to go up. And again, we're not trying to win them all. But if you're right, you know that you've got a potential to make all the way up to $30, $35 or more. And if you're wrong, you're going to lose a few bucks. Right? Just do that
Gotcha.
over and over and over again. Can you see the support on Microsoft? Again, everything's a little bit dirtier in the real world, so I drew lines to help you. But you see the support there
It's the orange line.
at the bottom, right?
Yeah.
And we'll call that about $135. And then you can see...
But wait, why is that there when that, like, one of those candlesticks is through it?
This is why it's an art.
Oh.
Well, they say technical analysis is a combination of art and science, right? My job is to teach you the psychology behind whatever is happening, and then it's up to you. If you wanted to draw your support line further down, it's up to you.
Oh, okay.
right? There, if there was a concrete
Okay,
step-by-step
yeah.
system, then you see how, and everyone says, well, why everything's so subjective? Why is everything so subjective? Because think about it. If I had $1 billion
Hmm.
and I knew that there was a step-by-step system for trading, I could screw you so hard. If I
Right.
knew every time a stock got to here, you were going to sell it, then what I would do is buy it aggressively to make sure you lose money and then you have to get out of the position.
So if that's the support and the top line, I'm assuming, is the resistance.
Yep.
If I felt like saying like the resistance is actually at the top of like those really high candlesticks there, like do you count those, or are those just like outliers, or like what are
Again,
those?
that's going to be up to your thing. What I would have said in this case is that the resistance is broken. Now, it's buying support and selling resistance statistically is an okay strategy, but not really the best.
What does it mean when the resistance is broken?
It just means, so if we go back to why do you think that when this broke at 20, it like shot right up to 30, right? Now, some of it might be that people wait for resistance to break. They don't want to play. So right now, we said that the distance between those two lines was $10. You can
Okay.
make a lot of money buying something for $10 and selling it $10 higher. What if the difference between that was like 25 cents? Now we're not thinking about days, we're thinking about hours. It's 25-cent range.
Okay.
Is it really profitable to try to buy and sell and make 25 cents over and over again? It's not really, right?
No.
So what someone may do is say, okay, I'm going to wait for whoever's selling this thing at that middle line. I'm going to wait to make sure he's gone. Because I think this company, Lululemon, makes great pants. And I think the company's going to go up in the long run. But I've seen that every time it gets to $20, someone hammers it back down. So what I'm going to do is I'm going to wait for it to break through $20 and I'm going to buy it then. Kind of telling me that whoever this is that's selling, you never know how big they are, you never know why. Whoever it is that's selling, they're out of the way,
Okay.
right? So I'm going to wait till then to buy. So it's actually a decent trading strategy to either buy the third green arrow as it breaks up and basically say if it closes back below this area, it's going to be one of those outlier candles. Or what a lot of people do, what a lot of the best traders do that I've never had the patience to develop, is wait for that to break and then wait for it to come all the way back down and retest that area. Prove to you that the buyer is still there, and then as it starts to move off that area, you buy it. Because you've basically said, okay, I want it to break this level now that it did great, and then it comes back down to it. If it starts to move away again, I'm going to buy it and just put your stop under that what's that, the fourth green arrow. And you see how little you're risking for
Yep.
potential gains. So you can see that there's like 4 different ways to trade this. So what you're going to do is we're going to develop like one way to trade, and you're just going to do that over and over and over again. And then if it doesn't fit with you, if you would rather be the person that tries to buy the support and sell the resistance, then you move over to that. Because there's different, that takes a lot of, buying the breakout is really popular because we can build you a scan to say something's breaking out now. And it's quick. You look at it, you say, yeah, it's breaking out. I want to buy it and I want to buy it. So it's very good for people who don't have an extreme amount of patience. Not saying anything, but because it's either going to move in your direction right away and you're right, or it's not and you're wrong. The problem with that is that they know it. So if I'm a guy who's selling and the stock's moving up, I'm not going to wait right at that point in order to sell it. I may wait until it pops a little bit above, and then I get all those people who are going to buy up and I'm going to sell to them. Right? So sometimes they break by a little bit and just come right back down.
Okay.
And that'd be a losing trade. But if you want like immediate gratification, a breakout strategy is the way to go. If you're okay with saying, I want the stock to pull back to this area, what you're going to do is you're probably over the long run going to do a little bit better. You're going to make a little bit more. Your trading is going to be a lot more relaxing. But you're going to have to wait for your trade to develop. So again, again, I'm glad that you picked up, and I'm glad that you see that there's multiple ways to trade the exact same chart.
Okay.
And how people are going to do it is going to be entirely based on your personality. So what I may say with Microsoft, with those two, and we're talking about the two far right candles on the chart, is that it kind of gapped up over resistance. So I may say something like, if it comes back and holds that resistance line and moves higher, I'll get in. I may say above that, so you see the little doji candle, not the farthest right one, but the second far right one.
Oh, which one? Sorry.
This guy here.
Yeah.
See, that's a doji. You might say something like, I know dojis mean indecision. I want to buy this stock because it broke resistance. I'm going to tell the computer to buy Microsoft if it breaks the top of that doji. And then if it gets back under this area, under the resistance line, that I'm wrong and get me out. And you could just set up a trade like that and walk away. And then you could check on it in a few days. And if it did the trade for you, great. And hopefully when you check on it, it's up money. If not, you said, if I'm wrong, get me out here. Right, so you see how we're starting to even now build trading strategies. So this is Tesla. It's actually really sad looking at these charts right now because none of them look like this anymore. But this is kind of the real world where, again, this was something else where I was saying, can you spot a resistance area that it kind of smashed through? And this one's hard, so I won't judge you. But I did cheat a bit for you with that line.
Like right here.
Right. So what she's pointing at is the gap between, call it 575 and 600 before it really took off. But you could see how...
That's where your red line is.
Right.
Duh. Okay.
So you could see how there was a bit of resistance in that area because it spent like 4 or 5 days in that area. And then when it broke, away it went.
Okay.
Now, we all know the answer to this because the markets completely fell apart right after I took all these screenshots. But another trading strategy would be when it broke out of that area and now it's come back to retest it, we know that prior resistance becomes support and prior support becomes resistance. So in this prior resistance now becoming support, you could say something like, I want to see Tesla push off that support and then I'm going to buy it there and I'm going to put the stop right below it. And that's what we call a pullback play. Because what you're doing is saying Tesla's obviously going higher at this time. So I want to find a place where that battle had taken place in the past and I want to put my order there to buy. And I know where I'm out if I'm wrong. And I know that there's way more upside. So if you bought it at 658 where it closed there and said, okay, I'm going to say the support is 575. So I'm going to risk $100 a share. Well, you could see that the top of that, I highlighted, the top of this range was 920. So you're saying I'm going to risk $100 a share. And if I'm right, I'm going to make $300 a share. Right? The math on that is if you're right 33% of the time, you break even. Right? So you see how it's just about gaining small edges. Small edges done many, many times.
Right. Righto.
So next week, trends. So you can see the hell of a ripper trend in Apple there, right? Trends are something that are obvious, but important, right? If I say, what's the trend of Apple?
It's going up.
Right? And we'll talk a lot about trends and whether you want to try to be a top caller and a bottom caller. Trends are important because we're going to make sure you're a trend. I think that you're going to do well with a breakout style trend continuation pattern. So you get that instant gratification, but you're always just going to be riding the wave. Imagine, again, see where the red line is there? Mm-hmm. Imagine if you said, okay, it was a bit of resistance a little bit further back, maybe a little lower, a bit of resistance right here. And you can see it spent a couple days there as resistance as well. So you know, based off all the psychology I told you, that the reason that it stalled at that point, right where the crosshair is on the screen, the reason the fight is happening there is because people saw it reverse at that point in the past. And they're in their head saying, I'm going to take a bet here. And then what those people probably do is say, I'm going to put my short here. And if I'm wrong and it goes above it, I'm out. So what you're going to do is say, I think if it goes above this, there's a lot of people that are going to get out. And the only way they can get out is buy. And by them buying, they push the price up.
Okay.
Make sense?
I think so.
Again, if you would like to sign up for Trade Ideas to get going, That's the simulation program. It's what I do. Again, I consult with them. It's what I do for use for everything. My back testing, my auto trading, my order entry, all of it. And they have a trading simulator. So that's what Jess is going to go on just to test the waters. So do that yourself. Get signed up, start playing, learn all the buttons. So when we start doing things, we're going to start possibly live streaming from time to time, talking about the markets, what's going on. Jess is going to be recording her trading while she's trading, talk about stocks she bought and why. So if you want to follow along with any of that, links in the description below. Is that it? Any more questions?
I don't think so.
Okay. Goodbye, guys.